All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while staying out of jail. So, today I wanted to talk about couples filing together, a question that I get from newly married clients or they're about to be married. And usually, when they're younger and they're just getting started in their careers, it's usually not much of an issue, but the question usually comes up when clients are a little older and or established more in their careers or their businesses. They're making a good amount of money and then they get married. One spouse is making a good amount of money or both are. I usually get hit with the question of whether folks should be filing together. In most instances, it works for couples to file together. It's usually the most tax advantageous thing to do. Just the way that the tax brackets are structured, it works in the favor of filing jointly. And also, there are some things that you are not entitled to if you file separately. And married filing separately, at least in the eyes of the tax law, is probably one of the most least advantageous ways to file. The tax law is written to discourage that. So, in most instances, you want to avoid married filing single, and normally you want to do married filing jointly. But as advantageous as married filing joint is and how disadvantageous married filing separately are, there are a couple of instances where it would make more sense to file separately even when you're married. So I wanted to go through a few of those times where it makes sense for couples to file separately. The first thing is it may make sense to file separately if your incomes are relatively the same. Usually not on the higher side. I'd say if your salary is falling anywhere between the 80 to 120K range, then both spouses make the same thing. Usually that's the sweet spot where if you do all of the math, it might shake out where it would be more advantageous and have a lower tax burden if you were to file separately when you factor in both the federal and the state. That's usually the sweet spot for couples that I've seen where it made sense to do that. So it's where again you're in that 280K to 120K band each spouse, then it may make sense to file separately. That's one. Another would be if you are recently married and you're considering filing together for the first time. Now, if one spouse is coming into the marriage with a bunch of back debt, they owe or they continue to owe taxes for years prior to you being married, it may not be a good idea to file together, or at least until that bill gets settled or put into a payment plan. Because once you start filing together and then they start reaching out to one of you and they say, okay, let's work out a payment plan, you may mess around and both of you be on a payment plan, and then the spouse that came into the marriage without the debt now get saddled with that debt. But it can be pretty problematic if you have both spouses taking on that debt. It can be pretty detrimental when taking out loans. If you're looking to purchase homes, autos, just in the credit market, it can create a problem if you do that. So you want to have that person who has the debt coming into the marriage, make sure they clean it up before you start filing together. Not necessarily have it all paid off, but you want to make sure that they are in a sustainable payment plan to keep the authorities off your back and avoid getting sucked into that. And lastly, you may want to avoid filing together if your spouse is involved in things they shouldn't be involved in, whether it be illegal activity or even if it's not necessarily illegal activities, they are misrepresenting things on your tax returns. If they are knowingly misrepresenting things in their tax returns and you are aware, you may want to file separately. In the event that spouse gets caught out there, things come back to haunt them by you not filing together with them, then it would just be that sole responsibility of that spouse. If you file together and that spouse is doing things that unscrupulous on the returns and you may or may not be aware of it, but your name is on it, so you're both are on the hook for it. So let's say you are in that situation where the spouse has gone, filed all sorts of returns that you had no idea. They were pretty unscrupulous. They were doing things that they weren't supposed to be doing, but your name is on it. And as I said, you're just as liable as the spouse, even though you might not have had anything to do with it. So There's something called a innocent spouse rule. It is something that you can file with the IRS, and it's essentially letting the IRS know that, hey, look, I know that my tax return said XYZ and it wasn't unscrupulous, but my spouse did it. I had no idea what they were doing. My name was on it. There is a way that you can wriggle out of that with the innocent spouse rule, but probably easier to avoid all that altogether is that if you're not sure what your spouse is doing on the return and you know that they're doing things that might be a little unscrupulous, you may want to let them file on their own and you file on your own. So that's it for now on that matter. If you have any more questions about this topic or any other accounting tax related questions, feel free to reach out. I'm happy to help. That's all for now, and I'll talk to you in the next one.